Welcome, ladies and gentlemen. Commodity TV here for you in Zurich at the Zurich Invest offices. And now with me is Caledonia Mining. You remember the fantastic gold producer out of Zimbabwe. And Maurice Mason, the Vice President of Corporate Development and Investor Relations, wants to give us an update. Maurice, hi.
Hi, Jochen. How are you doing?
Perfect. All fine. Hope you too. So, Caledonia, still full on track, I must say. Maybe you first can comment a bit on Q1, because the numbers were out.
Yeah, Q1 production numbers are out. It was a quarter in line with expectations. So we produced 12,900 ounces of gold for the first quarter. Not quite as good as quarter four last year. So we did run a little better in quarter four, but still in line with expectations. And we're keeping guidance the same for the year at 55 to 59,000 ounces for the full year.
That's nice. And of course, also at favorable costs, I would say, right?
We haven't announced costs yet, but yeah, the costs are in line. All-in costs last year were $850, just below $850, and we expect to keep approximately that sort of level. And so nothing untoward about costs. We're still making nice cash flow at these prices.
Absolutely. And you pay a quarterly dividend, because we have to emphasize that.
We do. We pay a dividend every quarter, and that dividend's been in place since 2012. It's an important part of our strategy. It's very well covered by cash flow, and it's certainly going to keep it and hopefully grow it as the project delivers going forward.
Yeah, perfect. Let's talk about Zimbabwe, because there were some nice changes for you guys, and I think it's the what's it called, the export credit incentive.
Export credit incentive. Yeah.
So can you elaborate a bit? What happened there?
We announced that last week. The Reserve Bank governor made a statement in February about the monetary policy framework for Zimbabwe, and in there they have announced an export credit incentive for exporters, which for the gold mining industry is 10% of revenue. So, and that's
a 10% kickback.
It's a 10% kickback. Wow. So just to qualify the maths correctly, there's a 5% royalty and then a 10% kickback. So effectively, over and above the current royalty terms, it's a negative 5% royalty for the situation, which probably makes Zimbabwe, to our knowledge, one of the best fiscal terms in Africa and possibly even the world. Corporate tax is 25%, which is not onerous, and then a royalty of negative 5%, which has been announced for the 2018 monetary policy framework. As long as it continues, we're happy to see that those policy changes which promote investment in the sector, which is very much needed in the country.
Wow, fantastic! And also there was some change in the politics, and I presume things are improving, right?
Yes. So I think it's important to note it's been 6 months since the new political dispensation, since President Mnangagwa took over, and he has. The new political dispensation have followed through with concrete policy measures in support of the statements that they made late last year. The most significant one for us is a change in the indigenization legislation for the country.
What does that mean, especially?
Previously, legislation existed in Zimbabwe that required local Zimbabweans to own 51% of all assets. We were compliant with that legislation, and that legislation no longer applies to the gold sector. So effectively, we have an opportunity, if all parties agree, for us to invest a greater percentage of ownership in the mine. So we currently own 49% of the mine, and we will be in a position, if there's a willing seller on the other shareholders' part, to invest a greater percentage of the mine. So
great, fantastic. Well, that sounds good. So back to the mine shortly. How is the development of the new shaft?
The new shaft is progressing well and according to plan. So it's within budget and on schedule. So we continue to
That's what I wanted to hear.
Yeah, absolutely. It's a major project for us. It's probably one of the biggest mining projects in Zimbabwe, and certainly in the gold mining sector. It is currently, the shaft is at a depth of almost a kilometer, 990 meters was the last level we announced. It's going to go to 1,330 meters, so all the way down. It's going to open up 4 additional production levels for us, between 750 meters, which is our current infrastructure, and down to 1.25 kilometers is the last operating level. So certainly a major project for us. It'll be in production in 2020. It'll be ramped up to full production of 80,000 ounces by 2021. And we're excited. It's going to deliver us 80,000 ounces at an all-in cost of $750 an ounce. So exciting. Good margin at these gold prices.
And then we all think about a rising gold price.
We do think about a rising gold price. That's not our game, Jochen. We're miners.
I know.
But I think.
But it looks like that something is happening in the market.
I think there's good reasons to be bullish gold. Absolutely. So there's we have no reason to think gold prices will go down. But just to be clear, we can make very good money at these gold prices.
You do it already?
We do already.
Yeah.
Operating cash flow for this business last year was $24.5 million.
Oh, that's a nice amount of money.
On 56,000 ounces. So you can extrapolate for yourself at 80,000 ounces.
But that means you have already paid for your investments, right?
The investment is covered by cash flow, and it has been covered by cash flow since 2015. So, 2016, 2017, both covered by operating cash flow. We expect to make enough cash flow this year to cover the capital investment for this year and next year. And then once we commission the project, the capital falls off. The operating cash flow will increase as the investment is commissioned. And then we expect free cash flow of anywhere between, depending on the gold price, $25 and $30 million a year from this asset.
Which would be absolutely lovely.
And considering the dividend is $3 million a year, we are...
Yeah, you can increase that slightly.
We could. We could.
Fantastic. Great. Maurice, it was a great update. Thank you very much on that.
Thank you.
And I think you're doing a great job, and I would say keep it going.
We remain hopeful and we remain cautious, but the future looks bright for our business and for Zimbabwe.
Yeah, perfect. Thank you. Ladies and gentlemen, that was Maurice Mason, the Vice President Corporate Development and Investor Relations of Caledonia Mining. And you heard it, things are going extremely well. Everything is full on track. And with almost 13,000 ounces produced in the first quarter, they are also full on track here. But what is even more important, the shaft is almost at 1 kilometer depth now, but in time and in budget, and it's all self-financed. The company has no debt, and the indigenization is done. So probably they can buy back a lot higher share than in the project, which secures also for the future a better position for Caledonia. I would say check out the company and don't forget quarterly dividends. Bye bye from Zurich.